And good evening, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, June 17th, 2021. Let me start here on the 4-hour chart, just to kind of show the count that I've been following thus far. Ooh, come on. You can see that I've been counting, we counted up 5 minor degree waves, and that completed minor wave 3. And then we did a minor wave 4. And now we're in a minor 5th wave advance to finish several degrees of advance. And first, we're finishing minor wave 5, which is completing a minor wave 5, which is completing an intermediate wave 5, which is completing a primary wave 3. So we've got a pretty significant high that we are aiming for, or possibly have already reached. And as I've been describing on the updates, when the market reaches a high, before I'm going to declare that high as the top, and for this, even whatever the particular sequence may be, I prefer to see on the hourly chart a 5-wave decline. And then that kind of would spell for me that could be the end. Thus, I've left this at 1, 2, minute wave 1, 2, and 3, and that's a 4. So I'm going to go down to the hourly chart to continue the discussion. So what I'm leaning at is that this possibly could be the top of the primary 3rd wave, the finish of all those degrees all the way up to the primary level. I moved over, I had put the 4 here, which was yesterday's low. The market then moved to an additional new low during Globex. And so I moved it to that low. It got challenged this morning in our session, in the US session. In fact, it was noon Eastern time, 9 o'clock here on the Pacific. And that surprised me. So, because during this whole crawl or just drop to the lows, the intraday lows, that the NASDAQ was flying higher. So the Dow and the S&P were getting slammed as everybody was piling back into the NASDAQ. So obviously the buying by whomever was very limited to tech and to the components within the NASDAQ. That being said, this, excuse me, can very easily, and may already have, turned into the first 5 down. And this could be finishing up a little corrective ABC, and we're getting another leg down. The market's going to continue to tell us, but I'm leaving this as is, given the fact that the S&P and the Dow could be the ones that run to the moon tomorrow, and that would clear up whatever I'm looking at and make it more clear as to what direction and where we're going to go. Because the NASDAQ did go up to new all-time highs, not once, not twice, but 3 times today, and had no problem doing it. In other words, the buyers were there and they didn't care. It was like, boom, just take it. And they did. The NASDAQ, on the other hand, did not, was stuck below 42.25. And that was a level that I really wanted to see it get it back above to give us some confirmation. In fact, they need to get back above that level yesterday in the afterburn rally at 42.28. So it got held around 42.22 and just could not even get above that. And that actually represents the 200-day moving average. And it's sat. It was like, put the brakes on the S&P. No, do not cross. Do not collect $200. So in any case, for tomorrow, the way that this is set up, it's very sloppy. Even the hourly chart, it's really sloppy, which, you know what, it has been, but we got to continue to deal with it. So I would feel that the market should continue higher. And where I can put fib targets, I first would start with Fibonacci retracement. And what we're going to be looking for is, again, what type of wave should we get coming up out of here? And it's got to be a 5 wave, and it's not. So maybe this is all misplaced, and this is a wave 2. Okay, so what could we be expecting, and what does it need to break to really start, excuse me, to put some heat underneath the S&P to, excuse me, allergies, to put a fire under the S&P so that if we get up above 42.29, 42.35 and start heading up to that high at 42.57.75, that's what it needs to break in order to put in confirmation that this 4 is correct and this 3 is correct. Failure to do so could place the 5 here and stack on the 5s above that, which would suggest this is going down. And it's going to go down to the ball of flames. Or this is wave A, this is wave B, and we got a C wave coming down, and it's a bigger 4. So we've got a couple of options going on here. Let the market tell us what. So upside, we've got still that 200-day sitting right there, staring us in the face. And the 50 is not far below, but they're starting to give support. You see they're turning higher. This is the hourly. They're turning higher. The 50 is making a slight turn after being pretty much flat for most of the afternoon. If that continues, breaking above the 200 should not be such a chore. Then we're going to be looking for these other levels. Tomorrow's quadruple witching, and anything can happen. Downside, here's the support. And if it breaks 41.82.75, the 4 goes away, and then we're looking at maybe it's still a 4, but that's an A, and this is a B, and now we're looking at the lower numbers. That would be also fitting quite well. ABC 4. We'll decide when and if it happens, but we're giving possibilities and what could happen and levels. Excuse me. It is trying to cough up, whatever. All right, so let's throw some Fibonacci on for if it is going to go down and produce a C wave. And then this decline would be, that's its relationship on the Fibonacci basis. So I start there, go up to there, go up to that high. No, come on, go away. 275, let's go. There you go. Oops. Okay. Here's the downside. And C waves, most common, 100%. So that's 41.47. Being a pretty solid tumble from current levels. Then the next in line would be, it's going to be 618% or 62% of the A wave. That's realistic. 41.76, yeah. That's the low from this of the Globex, 41.83. 76, not that much more. Could take care of it. Boom. Put a 4 and we go up. That would work. Then we have this zone and then 100%. And if it really gets wild and they hate it, you got 1.618. These also come into play, but this would be the next most common. So most common, second most, third most. Those are the relationships that the markets over the years have always paid attention to. So that's where we'd be looking. But the other levels also are in play. Doesn't have to go there, doesn't have to go there, doesn't have to stop there, et cetera, et cetera. Markets do what they want. We're just trying to put some framework around it, giving us an idea of, well, it could pause here or it could slide. It could pause here or it's just going to continue. And you can see that if it breaks there, it is going to slide further because it doesn't have anything until here. But what becomes more important when you're combining these is with the structure itself. If it's going to drop, I would anticipate that it's going to drop in 5 waves. the third being the strongest. So depending on where that kicks in, you're going to start to figure out what level it should get to because of the characteristics of the wave you're now going to trade. So that's why I continue to count all during the day, because it helps me figure out where this thing's going to go and how quick it should get there. So I'm going to leave it there. We have downside, we have upside. Let the market tell us. Follow your moving averages. Moving averages help to guide you as they did today. Likely on the way down, they guided. And then they guided on the way back up on your 1 minute, 2 minute, 5 minute. And then you cross-reference, you can use your 15, 30, and an hourly. And then if it's a bigger move and you're wondering, you got to go up to the date. So we use them all. Have a good trading day tomorrow. And the next update will be Sunday, June 20th.